The statistics coming out of China's housing boom are mind-boggling. In a fortnight, enough houses are built to reproduce Rome. In a year, it could replace every house in Spain. In a decade, it could just about build the equivalent of Europe's entire housing stock, give or take Turkey. It's this phenomenon that underpins the strength of resource-based economies like ours, and any major reversal would have serious implications here. I spoke to the Economist Intelligence Unit, Stephen Joske, who's just finished a report on the Chinese property boom. Stephen, house prices have been soaring in China, and also there's a huge amount of building going on. You've pointed out, in fact, that they build the equivalent of Spain's housing stock in a year, and they build Rome in a fortnight, not a day. But you're also saying it's not a bubble. Why not?
The fundamental reason is actually urbanisation. Urbanisation is really a very long, multi-decade process, which is only halfway through in China. They're getting up to the 50% mark now. And while that process is going on, it's really very hard to get a sustained downturn in housing. I think there's always the risk of a correction at various stages of the cycle. And there's actually a risk of a short-term correction this year and next year. But I think the message we're trying to get across is that it won't last long and there'll be a quick recovery back to fairly respectable growth.
In fact, have you ever heard of a housing boom like this?
No, this is actually the biggest demographic change in human history. The movement of Chinese farmers into cities. So there'll never be anything like it again.
What sort of probability would you put on a correction? I mean, I know you said there was a risk of one, but how much risk? And how big would it be?
Our current view for the short term, I say the next 1 or 2 years, is there's about a 15% chance of a significant downturn in the housing market. And that's based on looking at really some of the indicators that came out last year, where we saw actual housing construction go significantly ahead of sales, which suggests there's a bit of a overhang in the market. And on top of that, we've got the government very actively trying to cool down the housing market. That's been underway for quite some time in China. And there can be lags in that process as it flows through to activity. And but it's actually a very hard time to judge it. Normally you'd say that the odds of a significant slowdown are very strong in the second half of this year. But there's a very new factor emerging at the moment, and that is there's a massive build-up of public housing construction by the government, and that's really helping to support activity. So if you look at the current figures, there's absolutely no sign of an actual slowdown. Growth rates have come down a little, but they're still very strong at the moment.
We saw that when the US housing market corrected, there was a credit crisis there and then a global recession. What do you think the consequences of a correction in the Chinese property market would be?
If housing goes down, Chinese overall GDP goes down, and other global commodity prices, the Australian dollar will react very quickly to that news. So there's no way the rest of the world can be insulated from it. In fact, there's a very strong argument that the monthly housing construction statistics from China are probably the single most important economic indicator in the entire world at the moment.
One thing on our radar in Australia is takeovers from China. At the moment we've had Minmetals bidding for Equinox, and although that's an Australian company listed here in Canada, it's actually a bid by China for an African mine. Do you think that China is more interested in Africa or Australia?
They're definitely very interested in both. Africa is attractive because governments in Africa are quite welcoming to Chinese foreign investment, and it's I think that got thrown up when the Libyan crisis blew up, and all of a sudden we realised there were 35,000 Chinese building oil-related construction projects in Libya. And it tends to be, because they're relative latecomers to the resource acquisition game, they often have to chase the riskier areas where the major global investors have shied away from.
So should we expect a lot more takeovers from China for Australian firms?
Absolutely. It's really one of the single biggest issues facing Australia for the next generation is how to get the policy on this right. It's still very early stages for China as a global investor. We've seen, for example, just in the last 10 years, its dependence on imported oil, for example, has increased from a bit over 20% to nearly 50%. And that gives you an idea of its enormous dependency on foreign commodities, which is something very new for the Chinese, and it's only going to keep going up. They'll need more iron ore and more energy from offshore, and because China's growth still has many decades to go before it starts plateauing out, that demand for foreign resources will intensify, and it's not something we can sort of roll over and expect it to go away the next day. They'll just be back for more.
Thanks very much, Stephen.
Okay.